Melody with Realty Executives Main Street. I'm here at Reliance Title in Sweetwater, Tennessee, and I'm going to be talking with Christy McCosh, one of the closing agents for Reliance. This is Christy McCosh with Reliance Title here in Sweetwater, Tennessee. Can you kind of explain what goes on that settlement statement? I know you touched on it briefly earlier, maybe what they need to bring, what money they need to bring to the closing table. But could you just give us a brief summary of what that settlement statement is, what's on it, that kind of thing?
Sure. So a settlement statement is an accounting of all the funds related to the closing. So every settlement statement is going to have the purchase price of the property. And it's going to be split up. There's two settlement statements. There's one for the seller and there's one for the buyer. And so for the buyer, it's going to list the purchase price. It's going to list any earnest monies. It's going to deduct that from the purchase price. It's going to say they get a loan. It's going to give them credit for that loan amount. It's going to subtract all the fees that the title company charges. It's going to subtract any lender fees. I will say that there are two different settlement statements depending on the route you go. If it's a cash deal, it's more of a straightforward 2 or 3 page settlement statement. If you go through a lender, you have what they call a closing disclosure. So it's broken down a little bit more. There's 5, maybe 6 pages to that closing disclosure, and the seller has their own as well. But for the seller, it's going to list out the amount they sold the property for. It's going to have their title fees, the commission that comes out of that. It's going to have the proration of property taxes. It just shows line by line every dollar that is going in and coming out of the transaction.
About how far into the process do the clients receive their settlement statements, whether they're a seller or a buyer?
It depends, once again, what type of loan, if it's a cash deal or if there's a loan involved. If there is a loan involved, I'll start there first. Like I said earlier, the buyer by law has to have a closing disclosure 3 days prior to closing. And then if there are any changes to that closing disclosure, of course, they can be made during that time, and they can have the final closing disclosure at closing, but they should be provided that as a buyer 3 days prior to closing. The seller, in both situations, whether it's cash or a lender involved, the seller has to have their statement 24 hours prior to closing so they can review it. And the same way with a cash deal, 24 hours prior to closing, all parties should be able to have a copy of the settlement statement in case they have any questions. If they see something that needs to be changed, that allows them time to make those changes so it will be ready when they meet at the closing table.
You mentioned that there could possibly be some changes from the time of the closing disclosure to settlement statement. What would be some examples of changes?
Right before closing, if there's a lender involved, that the lender gets an updated homeowner's insurance premium, whether it increases or decreases. Now, there are certain parts of the closing disclosure where there cannot be any changes. The bank, the origination fees, the services that the borrower did not shop for, those items cannot change. But there are other places where they are allowed to change, such as prepaid insurance. Say, for instance, the realtor says, oh my goodness, we have a pest inspection bill that needs to be paid. That can be added to it because, it's not one of those fields that the lender required and that they cannot change. So, and 2, maybe proration of taxes was wrong and they've had to change that, but it's never usually a drastic amount. Sometimes I've come to closing before and the person has brought the check and I've actually had to write them a check for they brought me too much. So it's never, that's never an issue. As long as there's good communication with the lender and the title agent, you should know prior to closing how much you need to bring.
I will say, because Christy and I have worked on a transaction or two together, and sometimes those changes are in closing. If the closing date gets delayed
Yes.
by the lender for whatever reason, that will also change the
Mhm.
proration of the property taxes and
Yes.
things of that nature.
Right.
So one of the questions that I always struggle with, even on my own homes that I've owned, is, do I get the deed to the house? Can you go into that about how that process works?
So at closing, of course, the seller will sign the deed. It will be notarized, and then we will send it to the courthouse. Whichever county that the property is located in. Then, when that deed comes back to us, what we do, we send the original deed. If you purchased an owner's policy, we will issue that at the same time, and we mail that original deed and owner's policy of title insurance to the new owner. So you should be in receipt of the original deed.
How does the title company get paid, and what expenses does a buyer have in regards to the title company?
So we get paid, obviously through closing. Our fees are added in. We always charge for a title exam. We have a settlement fee. We charge for the preparation of the deed. If there is a lender involved and they have the lender's title insurance, that also is paid at time of closing. And then once closing is complete, our fees are sent to us. If there's a lender involved, they send us our fees. And then if there is a cash deal, then the fees come at closing. We have the funds, we receive those at that time after we disperse everything. It's pretty straightforward. It's listed on the closing disclosure or the settlement statement exactly. We itemize our fees, so if there's ever any question, you can see where those fees are. We collect the total amount that's needed to fund the transaction. And so when that closing is over, we disperse. If we have seller proceeds, we give a check to the seller. We pay commission. We give the commission to the realtors. We pay off any mortgages. We pay off any judgments. We pay any property taxes that are unpaid. We complete the whole transaction. So as a buyer, you just bring that amount that we tell you need to bring. And as a seller, you usually don't have to bring anything. You're lucky. You get to leave with a check.
We do have a lot of new neighborhoods that are being built in East Tennessee and that have HOA. So HOA fees you guys also deal with closing. Are those normally prorated, and do you guys take care of that as well?
Yes. If there is an HOA, we do take care of that. So we will contact the association that manages those HOAs. We will request statements. We will see if there's anything that is owed. And then, say for instance, the seller has already paid his year worth of HOA dues. Then at closing, we'll prorate that. We'll go ahead and reimburse the seller for the remainder of the year and take that from the buyer. At closing, we get the information from the HOA company if there's any other fees that need to be collected, like a transfer fee or that type of thing, and that will be included on that closing statement. You should see that on the closing statement.
Don't forget, if you would like to contact me, here is all of my social media accounts. I would love for you to reach out to me. There's also my email and phone number. If you know someone, or if you yourself is interested in purchasing a property or a home, or even selling your home or property, I would be honored to be your realtor.